Take it away.
Ready to go. Okay, welcome to our 2:30 session on crypto. And I think we're also going to be hitting a little bit on gold, the dollar, rare coins, interesting relations between all of these. So we're going to have a brief video overview on crypto, and then we've got a couple panelists who I'm going to go ahead and introduce. We have Rob Rodriguez is in the room with us, and I believe James Passin is going to be joining online. So I will go ahead and introduce these two folks. James is a former hedge fund manager with Firebird Management LLC. He has background in financing and developing venture stage companies and trading emerging market securities and other financial markets. He serves on the boards of several public companies, including Mindset Pharma. James has previously presented in numismatic forums on precious and rare metals and cryptocurrency. And we've also got in the room with us Rob Rodriguez, numismatic researcher and collector. His background is in finance. He was a CEO of First Pacific Advisors, the First Pacific Advisors Capital Fund between 1984 and 2009. And mind you, there's three major crashes in this period. Averaged 14% annual return. So where do I sign up? All right. With that, we're going to jump into the video, and then we'll get to the questions.
The advent of Bitcoin in 2009 has challenged traditional concepts of money and drawn significant attention from the financial and technology communities. With online exchanges, virtual currencies are now accessible to the everyday investor, and related fortunes have been made and lost in short order. In this presentation, we'll provide an overview of the digital currency landscape and explore a number of numismatic connections. One might first start by asking, what is money? Much of our recorded history is straightforward on this point. Gold is money. The first gold coins were produced around 600 BC, and until the 20th century, gold circulated widely as a common medium of exchange. Gold is a natural selection for money. It's rare, durable, and easily formed into coins. Silver and copper have also played a role by satisfying a need for smaller denominations, but the gold standard, to coin a phrase, is simply gold. Or at least it was for several millennia. In the 20th century, most countries moved toward fiat currency without gold backing. This separated national economies from the vagaries of gold production and allowed governments to more closely regulate money supplies and control inflation. Central banks could also now stimulate an economy by increasing the money supply. Still, the meaning of money, whether gold or paper, comes down to trust. Does the receiver of currency trust that the money received in exchange for goods or services can be readily convertible into other goods or services? In stable economies, the public gives little thought to this question, and the level of trust in the national currency is high. Of course, the ability to create money by simply turning on a printing press creates great temptation. The Zimbabwe dollar is the most famous recent example, in which an increase of the national money supply and other factors led to massive inflation and banknotes awash in zeros. This $100 trillion example had a value of 40 cents in 2015, but is today more valued as a collectible that illustrates the power of inflation. Enter Bitcoin, a digital currency that in some ways echoes our relationship with gold. For starters, cryptocurrencies restore the separation of money and state, and government actors lose the ability to create money with the stroke of a pen. Like gold, the supply of Bitcoin is limited, and the capacity to mine additional Bitcoin diminishes over time. Both gold and Bitcoin are rare and easily portable, two important factors in establishing a common medium of exchange. The idea of moving away from fiat currencies has drawn little political traction. World governments have reacted against crypto, which threatens their ability to regulate economies. China has banned crypto completely, and even in the United States, crypto is treated like property, meaning that it's subject to taxation when traded. A lone exception is El Salvador, which has fully legalized crypto for public use. Without government endorsement, the widespread acceptance and adoption of Bitcoin comes down to a matter of public trust, which is reflected in daily trading of Bitcoin on various exchanges. Volatility is the watchword, and, on average, Bitcoin exhibits larger swings than fiat currencies. This argues against its use as a common medium of exchange, as the general public prefers stable currencies. Crypto is thus currently more driven by investors and speculators, and they are legion. As of January 2023, the global cryptocurrency market value was about $1 trillion, with Bitcoin representing about 40% of this amount. Ethereum, another leading digital currency, represented about 19% of the total crypto value. By comparison, the US annual GDP is around $23 trillion, meaning that the total amount of crypto holdings are relatively substantial. The investment and speculation surrounding cryptocurrency has captured the public attention, highlighted by several much-publicized business failures. Silk Road, for example, was an online black market for illegal drugs and other merchandise that was launched in 2011. Transactions were conducted exclusively in Bitcoin, with drugs moving through the mail. While the flow of funds was shielded from law enforcement, the movement of illegal substances was not. Ross Ulbricht, the site founder, was arrested in 2013 and ultimately received 2 life sentences on charges ranging from money laundering to drug trafficking. In a bizarre twist, the Justice Department announced in 2020 that it had recovered $1 billion worth of Bitcoin that had been stolen as the result of a security breach in the Silk Road website. Ulbricht, still in prison, agreed to forfeit the recovered Bitcoin in exchange for cancellation of judgments related to his prosecution. Mt. Gox, a Bitcoin exchange founded in 2010, failed in 2014 after it was learned that it had lost 750,000 Bitcoin, then representing a value of $473 million. Most of the Bitcoin was lost in a series of thefts that began shortly after the exchange was founded. Stored in a so-called hot wallet, Bitcoin was surreptitiously acquired by hacking the Mt. Gox site. The chief executive, Mark Karpeles, received only a suspended sentence, as the court felt he had acted without ill intent. The Mt. Gox case highlights a drawback of crypto. Exchanges essentially act like banks and facilitate the movement of funds between account owners. But these online exchanges hold their users' private keys, which are necessary to execute transactions on the crypto blockchain. The security of crypto thus becomes limited by the security of the exchange. And, unlike most U.S. bank deposits, there's no federal guarantee backing compromised or insolvent crypto exchanges. As an alternative to using a crypto exchange, users may personally hold their private keys, which are 32-character codes, much like someone would store a credit card number in a secure place. This has its own drawbacks. In one well-publicized case, a UK Bitcoin holder threw away a hard drive in 2013 that turned out to hold the crypto keys for Bitcoin worth $181 million. A local council denied his requests to search the landfill for the hard drive, calling it a significant ecological risk. Unlike a credit card number, crypto users have no recourse when a private key is lost, and these assets are lost forever. Returning to the crypto exchanges, perhaps the most impactful failure occurred in fall of 2022 with the collapse of FTX and its sister firm Alameda Trading. At the time, the majority of the world's crypto trading was executed through either FTX or its competitor Binance. Following a report that Alameda held substantial amounts of FTT, a digital currency created by FTX, investors quickly rushed to liquidate their positions in FTX. Account holders pulled out $6 billion over 3 days, and FTX found itself in a cash crunch. FTX and Alameda entered bankruptcy proceedings in November of 2022. The relationship between FTX and Alameda was indeed suspect. The Wall Street Journal reported that FTX had loaned Alameda $10 billion to support its hedge fund operations, and that the company principals were aware that these funds represented FTX client deposits. John J. Ray III, appointed by the bankruptcy court as a liquidator, reported a sorry state of affairs to the House Committee on Financial Services. Literally, there's no record-keeping whatsoever, he stated, and further noted that the company used the small business accounting tool QuickBooks, despite handling billions of dollars. Ray also reported that there was no centralized register that identified where the company stored its funds. Behind it all was the enigmatic Sam Bankman-Fried, known as SBF within popular culture. Bankman-Fried was ostensibly a wunderkind, with a reported net worth of $26 billion by the age of 30. He was active politically and philanthropically, and his commitment to effective altruism seemingly heralded a new breed of millennial billionaire that would allocate wealth more progressively than the previous generation. The sudden collapse of FTX forced a reevaluation. Was FTX simply the next entrant in the historically long list of Ponzi schemes, or was Bankman-Fried truly dedicated to the greater good? Of course, for FTX clients, which numbered in the millions, this philosophical question did little to undo the losses. The volatility of crypto has led to a class of digital coins known as stablecoins. Stablecoins can be backed by a variety of assets, including US dollars, commercial paper, or precious metals. Other so-called stablecoins are controlled by computer algorithms. The idea is that asset-backed stablecoins will be less volatile than purely digital coins, and thus more suitable as a circulating medium. In practice, this is generally true. Remarkably, the most popular stablecoins are backed by fiat currency, a rather perverse situation when one considers the original intent of the crypto inventors. Crypto was intended to be an entirely sort of new money, but the fiat-backed stablecoins effectively act as representations of US dollars or foreign currency. So why use stablecoins if they're merely dollar substitutes? The main advantage is that stablecoins don't require users to retain multiple international bank accounts or third-party intermediaries to transmit and receive payments. Privately paying an international invoice in stablecoin, for example, simply requires a mouse click. In this sense, the stablecoin isn't about an alternative form of money, but rather symbolizes a financial service built on top of the fiat currency already in use. Stablecoins backed by algorithms are riskier. In this case, crypto issuers attempt to peg the value of one crypto asset to another asset, typically the US dollar, using software that endeavors to maintain a balance between the two mediums of exchange. In May of 2022, the stablecoin Terra USA collapsed under a wave of withdrawals, exposing a currency with insufficient collateralization. Meanwhile, the dollar-backed Tether coin fell only to 97 cents and quickly recovered, despite the spike in overall stablecoin redemptions that followed the Terra USA implosion. Digital dollars are somewhat similar to stablecoins, but, being issued by the government, they represent actual money. The digital dollar has not yet been created, but the Federal Reserve is studying the issue closely and released a related paper in January of 2022. In this system, digital money is issued by a new entity within the Treasury, while the Mint and Bureau of Engraving and Printing continue to issue paper money and coins. The digital dollars are transmitted by a central bank to individual accounts, where they can be accessed online or via a mobile app. Other countries, such as China, are already doing this with their own currencies on an experimental basis. Introduction of digital dollars raises several issues. If the government has access to user accounts, it can now more easily trace the flow of money, a concern of privacy advocates. How does the government ensure that the Department of Justice doesn't have unfettered access to the massive amount of data created with a digital dollar? Cybersecurity is also critical. The government is just as susceptible to cyber attacks as anyone else, and hundreds of millions of digital dollar accounts would become an immediate target of cyber thieves. None of this will happen soon. As the Fed Chair Jerome Powell commented, "I think it's more important to do this right than to do it fast." While most Bitcoin is traded virtually, physical Bitcoins do exist, and some trade at significant premiums to their Bitcoin value. Physical Bitcoins bear a digital code, typically on the reverse, that allows the holder to access a virtual Bitcoin wallet. This is somewhat analogous to a retailer's gift card, which bears an account number or a magnetic stripe that can be used to access the card's value. The best-known series of physical Bitcoins is the Cassius coins, which were produced by Mike Caldwell between 2011 and 2013, in denominations from 1 to 1,000 Bitcoin. In total, about 28,000 coins were produced, with a total value of about 91,000 Bitcoin. At this point in time, Bitcoins were valued around $400 each. Some of these pieces are quite collectible. In November of 2022, Stax Bowers sold a 1 Cassasius Bitcoin for $38,400, a substantial premium over the Bitcoin value of $20,000 at the time. A more typical example is a Cassasius 25 Bitcoin that Great Collections sold for $1.69 million in November of 2021. This represented about a 3% premium over the Bitcoin price at the time of bidding. In the mid-2010s, Titan Bitcoin produced physical Bitcoins struck from both gold and silver. This curious offering, combining 1 ounce of bullion and 1 Bitcoin, appealed to both hard money and digital currency advocates alike. As with traditional coins, the design was chosen to convey a political message. The Titan website outlined the symbolism of the obverse as follows. The face of the coin depicts Lady Justice, a depiction of blockchain technology, standing against the wind while she intently compares 2 locked blocks. Their key hangs around her neck. She weighs her blocks while blindfolded, symbolizing the fair and transparent treatment by which each transaction in the blockchain is evaluated. Her key has the power to seal the contents in each block forever, and is a symbol of the security of blockchain technology. Above her is the Latin motto Unum Pecuniae, which means one currency for all. The idea of combining precious metals with Bitcoin did not gain significant interest, and today most physical Bitcoins are made of base metals. Regardless of the composition of the physical Bitcoin, the owner of the coin is free to cash out the Bitcoin value at any time using the code on the coin. Physical Bitcoins with unfunded Bitcoin wallets do trade among collectors at reduced values. This would be akin to trading a gift card with no remaining value. The card retains some appeal as a collectible, but this is minimal except in rare cases. In recent times, we've seen crypto rise to an all-time high, with a Bitcoin value of over $60,000 in November of 2021. Shortly before achieving this peak, Crypto.com issued Matt Damon's Fortune Favors the Brave commercial, a futuristic appeal squarely aimed at humanity's built-in compulsion to rise above the crowd. Let's have a look.
History is filled with almosts, with those who almost adventured, who almost achieved, but ultimately, for them it proved to be too much. Then there are others, the ones who embrace the moment and commit. And in these moments of truth, these men and women, these mere mortals, just like you and me, as they peer over the edge, they calm their minds and steel their nerves with 4 simple words that have been whispered by the intrepid since the time of the Romans. Fortune favors the brave.
This commercial played a prominent part in the February 2022 Super Bowl advertising, an event that attracted 3 other crypto-related ventures as well, at a going rate of $10 million per minute for Super Bowl commercial time. Consumers who responded to the call have generally done poorly, with Bitcoin recently trading around the $28,000 level. In the fall of 2022, a number of celebrities were sued for damages related to their crypto-related endorsements. In October, the Securities and Exchange Commission announced charges against Kim Kardashian, who had not disclosed compensation related to her social media promotion of Ethereum Max. Kardashian settled with the SEC for $1.26 million. Other names involved in crypto-related litigation included high-profile stars such as Madonna, Justin Bieber, and Tom Brady, who appeared in a 2022 FTX Super Bowl commercial. Crypto ads were noticeably absent in the 2023 Super Bowl telecast. Still, the promise of crypto comes in an environment where technology has delivered solutions for problems that only a generation ago fell into the realm of science fiction. Who imagined a globally accessible store of information, or the ability to instantly connect with anyone in the civilized world? Or that these platforms would give rise to social media and a $1 trillion company whose main function is to freely enable users to search for information. Today, we believe in market and technology disruptions simply because we have witnessed them. In that context, the idea that unregulated digital bits might replace paper money is less of a stretch. One thought about the future of crypto is that it might replace, to some extent, the historical role of gold. The two assets share many attributes. Both act as part money and part investment. Neither are widely accepted in a retail context, and apart from some industrial uses, gold has no inherent value. You cannot eat it, wear it, or build a house with it. Its value simply comes from a ubiquitous acceptance of the yellow metal as a store of value. The digital generation may well view Bitcoin the same way. Raised in an environment where electronic payments are the rule and not the exception, millennials simply won't relate to hard money in the same way as their ancestors. Still, it is highly unlikely that world governments will cede the authority to regulate money supplies to a completely independent crypto entity. At this point, Western governments seem willing to look the other way, as long as crypto is treated as an investment and legally taxed. In the meantime, crypto clearly has an audience, and there's obvious demand for the privacy and portability it provides. If the market continues to perceive this value, it seems likely that crypto will continue to play its dual role of part speculative investment and part money. Our prediction is that the crypto market will coalesce around a small group of winners, currently Bitcoin and Ethereum, and that values will continue to fluctuate in response to any number of factors. I'm going to get this set up. You
Okay.
can go ahead.
All right.
Everyone can hear
So
you.
we're gonna get into this. We're gonna let the audience guide the discussion here a little bit. If you're watching online, you can enter questions in the chat, and we can take questions in the room as well. We have
James, you can go ahead and turn your camera on and unmute yourself. I'm getting you up on the projector.
Great.
so we've got James remotely, and we can also see him in the room. And we've got Rob Rodriguez here as well.
There we go.
All right. We have the Q&A here. Oh.
Let's see. Put that down. Oh, it's over there. I'll be reading off questions from the Zoom
all right.
Q&A.
Very well. James and Rob, maybe we could just start out with maybe your quick take on crypto, where it's been, where it's going, its overall in the market today.
Sure. I can start. Be happy to discuss that. If one thing to keep in mind is that Bitcoin is the best performing financial asset in world history, and if you listen to anybody that had this kind of dogmatic, negative view on Bitcoin, possibly, you would have missed this extraordinary period of wealth creation. But that's really, when I look at the future, I mean, I would say that there's, I think it's really misleading to focus on, for example, the 57% decline of Bitcoin from its peak. I mean, the fact is that over the last 24 hours, there's been $19 billion of trading volume in the Bitcoin market. So the amount of liquidity that is underpinning Bitcoin is just extraordinary. So the liquidity, in my view, is one of the things that will continue to attract new money into Bitcoin.
Thanks, Jim. Rob, your quick take? Sure.
It's a debatable topic about what the future of Bitcoin will be. There is no question it's the number one unit in that particular space, and therefore it has seasoning. But some of us who are critical, or shall we say skeptical of it, look at the coin and actually wonder what exactly it is and why does it have value. And most people will define it as, well, it's defined in terms of a limited number of coins, and thereby that creates scarcity. And that is a legitimate one. But on the other hand, you look at the likelihood that an infinite number of coins can be created theoretically, and as of early this month, there were over 22,300. So I think there is a massive shakeout, as you can see, that between the number 1 Bitcoin or in the crypto area and number 10, you go from around 50% of the marketplace to less than approximately 5%. I mean, less than 1%. So I think that the jury is still out, and the outcomes of what governments might do legally, et cetera, pose various risks to it. And I would say that it's still a debatable point about how it will unfold.
And we'll open it up for questions in the room. Yeah, go ahead.
Can you kind of spell out mining of Bitcoin? And I don't know if that is still the same concept like what the theory, if there's mining that what I mean, I hear about the resources that is used, the energy resources in mining Bitcoin. Is that the same thing with Ethereum? And just kind of expand on that. It's a kind of a hard concept for me to wrap my mind around. So I just hear what you guys have to say.
Yeah, go ahead.
Yeah, sure. So sorry, I was hard to hear the question. Was that about the energy intensivity of Bitcoin?
Yes.
Yeah. So if Bitcoin power consumption is a fraction of other industries. I mean, it's almost insignificant. But if you view, for example, the energy intensivity of Bitcoin is far lower than the gold mining industry. But if you view it as a monetary system and think about how much energy goes into maintaining the U.S. empire and the U.S. dollar financial system, I mean, it's almost a joke. Bitcoin is the most energy efficient way to create a monetary system that has ever been invented. And if you look at Ethereum, Ethereum's transitioning to proof of work, a proof of stake as opposed to proof of work, and that will radically, exponentially reduce the power consumption of Ethereum. So, the Bitcoin is still, will continue to be proof of work. But I think there's a lot of false framing in terms of this environmental question.
Yeah, that's an interesting point. We've heard a lot about how Bitcoin mining takes up like the entire energy consumption of, some country. But, James makes the point that in terms of the total consumption of energy in the whole world, it's, I won't say it's quite a drop in the bucket, but it's maybe less than the media has led us to believe.
What did he say is that the difference between it and Ethereum?
So there is a innovation, and I'm not sure if it's in Ethereum or it's probably in other digital currencies as well, where they basically their validation algorithms for the creation of the currency are much less compute intensive than they past. So
yeah, that's the case with Ethereum, which is transitioning to what's called proof of stake. So proof of work is where you have the heavy computation to solve problems to generate the blocks. The proof of work, the validators are effectively staking an inventory of tokens and generating a return by staking it. And this ensures the resiliency of the blockchain and prevent it from corruption, from double spending. So the proof of stake is a huge innovation in terms of creating an energy efficient blockchain. There's some other coins that also, there are other blockchains that are based on proof of stake, but for me, gambling on what are called shit coins or altcoins, who knows? But that's really the proof of stake is a real thing now if you look at Ethereum.
yeah.
Okay, one of the questions we have online, how does one mine Bitcoin?
I'm not going to answer that because I've never mined Bitcoin. Have you mined it?
I have not personally mined it. I know a lot of people that were huge miners, but basically it involves having some dedicated whether it's to compete. I mean, people used to do it on their like laptops and desktops. It's not feasible now to be competitive. So it's generally mined in massive server banks that have machines with like Raspberry Pis, or I don't know exactly how they build it, but basically dedicated hardware to mine it. And I'm not a cryptologist, but as I understand it, that the mining involves solving problems, and you get rewarded by solving the problem, and then the block is printed. So this creates a competitive economic incentive to maintain the blockchain without any one party having any kind of control over it.
A friend of mine was a senior member in the CIA, and his claim to fame is he solved the riddle that would create a problem in deep space telecommunications. And that is why you have your GPS today, and he has a special award for that. I cannot disclose who he is. However, he was a Bitcoin miner, and he had his entire living room with various types of computers and going on. And he concluded about maybe 4 or 5 years ago that the cost of where he was at would be non-competitive. And what you've seen miners move around the globe to wherever the cheapest energy is located on a basis. So that's being calculated all the time. When China basically outlawed the mining operations there, they just picked up a stake and they moved over to Kazakhstan, and they began it all anew there. Very transportable.
There's a lot going on in Mongolia too.
Yeah.
Yeah. Go ahead.
Another one online. In the future, could supercomputers be able to crack codes and access accounts?
That's it, tough.
And I don't, supercomputers is sort of an outdated concept, but I understand the question. And what I would say is that quantum cryptography, quantum computing, potentially, in theory, you could crack, the major crypto algorithms. However, you're also going to be able to crack every password in the world. So, the whole world is when that happens, like, the security of Bitcoin is going to be a minor problem. What I will say is that the people that I know that are, for example, work for blockchain developers or involved in coding, creating applications, they're some of the smartest people I know. So they're paying attention to this. My feeling is that Bitcoin and other major protocols will have to evolve and fork to incorporate quantum mathematics into the actual algorithm. And if they don't do this, they won't survive. But but it's not just Bitcoin. Seriously, if somebody figures it out tomorrow, then the world is doomed because everything is going to be hackable.
I would just jump in on this one here, is that I think that's a concept that is far beyond the time frame that is relevant in terms of the valuation and usage of this particular medium. And in this decade of financial absurdity on the parts of various governments, you'll see economic upheavals within this decade. I would think that one of the last things I would be thinking about right now would be the ability to have a supercomputer to break the codes when we can't even, at the Federal Reserve, monitor, follow, and control the simplest things of money management in a bank, which is called duration risk between borrowing short and lending long. And if they blow it there, you just had one today, First Republic Bank, it's down 49%. I said, so I guess I'm a little bit more on the thing of, I'll let somebody else worry about that. I think there are bigger issues ahead that you're going to have to be thinking about.
To further Rob's point, at least from my perspective, if you look at, what the Federal Reserve has done since it was created in terms of devaluing the dollar, through money printing, and really every other central bank does the same thing. It's funny when I think about the title to this panel, crypto, and criminals. The criminality of the, Federal Reserve system, where inherently the money is getting debased, and sometimes inflation, holding back because of technological innovation. But the very reason that some of us love gold, it's the reason why I love crypto, because it's not the central banks can't devalue it. And in the context when we're having an actual banking crisis, this idea about theoretical risk with Bitcoin or whatever, compared to the reality that we're in a banking crisis, and it's for me it's quite astounding that everyone has blinders on and can't see this.
I would jump in here, and another aspect of it is we're in a dynamic regulatory change involving crypto and various types of coins. And there's only one exchange that I know of that has a major auditor, and that's Coinbase. And they just received a Wells notice of violations here about 3 weeks ago. And as you know, Binance is also under investigation and under charge by the CFTC. So we have these things going on presently. And when I've asked people who are enthusiastic about crypto, or in this case, Bitcoin, I would ask them over a number of years, how is it treated under the Basel III Accords? And I would get a deer in the headlights look. And as of earlier this month, the new regs came out, and there's stratification on what banks can use. And why do I bring banks in? Is you can have this point A to point B going on in crypto, but when you really want to transfer something in or use it in a cash-based society, it has to either uplink from somewhere or downlink from somewhere, and that brings it into the financial regulatory area. And so this is a highly fluid area, and Coinbase, as you know, is thinking about possibly going offshore if they have to. And this adds a degree of uncertainty to people as to how they will hold, or how they will transfer, or how they will monetize their forms of digital currency.
Gold, if I can buy gold and hold it in my hand and take it home, I have trouble in my mind understanding the crypto world and how I protect myself, because I don't have this. Can you give me some assurances, or what do I?
Well, if you have a friend of mine, he sold his company for a lot of money, and he was creating an alternative to the Bitcoin or digital coin space. And one of the things he pointed out to me was that there was an error factor going from point A to point B. And if you have an error factor on that, then who do you go to rectify the error? So for several years, and I'm sure our other guests can chime in on this, is that I've always viewed this area in two different dimensions: horizontal and vertical. Horizontal is what people are talking about, going from point A to point B to point C, that kind of thing. There's a vertical area, and that's where I kept saying, if it is, how is it structured? The structure of the vehicles, the structure of the organizations in there. So to put it more into what people like yourself and myself would relate to would be a bank. And I say, if I go to my bank, I want to wire transfer money from point A to point B. If there's a problem, I go back to my bank. Now, the vertical structure is, what do I think of my bank? Is my bank secure? And all like this. Now, tell me, you had Tether have $3.5 billion of their assets on deposit in Silicon Valley Bank. Last time I checked, your guarantee is only $250,000. They didn't do their homework. None of the people there at SVB did their homework. The damn Federal Reserve didn't do their homework. This thing was already insolvent at the end of December. So that is the vertical area. So if I take that and go over into the crypto space and say, what was being done to validate the vertical structure, the internal controls, et cetera, the separation of capital, such as FTX and all these others here?
Rob, if I might, just one observation. No serious, crypto player views these exchanges as, a place where a platform where they're going to store a lot of crypto. That was more like quantitative, investors doing, heavy quant trading, viewing it as a financial market. But most people that hold crypto at least hold significant amount in cold storage or in wallets that they control. So it's not with a trusted intermediary. Because I agree with you, if you're viewing it as a bank and you have a trusted intermediary, why not just go back to fiat, and deal with banks? But in crypto, the thing is you can get sovereignty over your money. And the way, for example, I like to store offline crypto, there are software programs you can generate seed recovery phrase. So for example, 24 words, and you need to just store those words. So what I'll do is I will print it out, laminate it, put it in a fire resistant pouch in a safe in a number of different states. And then I know that I can get to that particular crypto or Bitcoin or whatever crypto I'm storing. But even it's simpler than that. Like those 24 word seed recovery phrase, you could bury it into a poem and email, and put it on Twitter, and no one knows what it means, but you can then access it and pull it out. Now, that there's really, you can't take, I don't know. I personally, the idea that you could take $1 million of physical gold and, fly around the world without getting problems seems very low. $1 million of crypto, no problem. That's $1 billion of crypto, no problem. Now, the question of how to use it, is an interesting one. But, if you look at what's been happening with the weaponization of the US dollar by the US government, using the US dollar as a policy instrument against, political enemies, it's scaring a lot of countries. A lot of players are starting to move away from the US dollar. I mean, there's a fundamental, system of trading. So we see some countries are starting to, in fact, use Bitcoin as kind of a basket in a trading method, like Russia, for example. But yeah, sorry, go ahead.
Yeah, the de-dollarization that you're talking about is absolutely true. And, this goes back to basically the foundation of our international finance from 1944, which was Bretton Woods I, and that was establishing the post-World War II order. Then Bretton Woods II was 1971, when Nixon closed the gold window. I argue that Bretton Woods III took place in early February 2022, and the present administration was clueless of what they were doing. And that I'm referring to is when they put sanctions on Russia, they also sanctioned the Russian central bank and effectively confiscated 55% of the Russian central bank reserves. I don't care about whether you support or not support the situation there, but just go to the central bank. When they did that, to put it into a similar way, if you had your money in Silicon Valley Bank and it was closed down, you would be very nervous. So you can't get to your money. If you're an outside Silicon Valley bank, you start looking around and say, oh, how's my bank? Should I go to a better bank and all? But when you're a central bank and they saw this happening, take Silicon Valley Bank, put Russian central bank into that, and you can't get to the money. Other central banks around the globe saw that. As a result, I believe when they sanctioned Russia in February of 22, they opened Pandora's box of central bank reserve policy. So if I want to see anything happen, what are the responses? Subsequent to that period of time, you saw central banks in the globe in 2020 take their gold ownership up by 1,137 tons versus a prior record of 657 tons. You're now seeing de-dollarization in terms of the transaction unit of account. So this is creating in motion some dynamics that I don't think the administration and many people in Washington were thinking down the road about. And one is the last thing I'll say is that when Russia was sanctioned on the central bank, one of the comments was made, we're going to make the ruble rubble. Well, when Putin responded in March 30th, linking the ruble to oil that if you were a hostile country, then you would have to pay for it in rubles. All of a sudden, the ruble that fell from 82 to 150 in 1 week went from 150 to 82 and then went to 62. And for the last year, the ruble has been the strongest currency in the world. How many people would have thought about that? So I'm going to say is that this dynamic of change, central banks are looking around the world. I don't see central banks going into the crypto area other than they want to create their own central bank digital coins. And again, we're talking about timeframes. And I think this is more germane in terms of the next 3 years.
I mean, my view is that we're going to start to see certain countries. I mean, it started with Ecuador. Other countries are looking at, fully legalizing Bitcoin, for example, as money. But I am very confident that certain governments that are not particularly friendly with the U.S. will start accumulating, or they already are accumulating Bitcoin as a off-balance sheet asset. And so I think the central bank digital currencies, I mean, I don't even want to get into that because it's going to be such a disaster for the world if they're implemented. But all that will do will drive economic value into real crypto, not the funny money from the government. So the digital onboarding will drive money into Bitcoin. Maybe certain other cryptocurrencies as well.
We'll see what Zimbabwe does. They just started that here just in the last 36 hours.
Just to add on to Rob's point of what we've seen in China is they have tremendously drawn down their dollar reserves, since this seizing the Russian assets, and they are starting to trade oil products with the Middle East in yuan denominated transactions. So that will, over time, if that continues, that'll continue to weaken the dollar.
Yeah, like Moscow is in the largest bank in Russia is in the process of creating a digital gold-backed coin, and out there, I don't know where that's going to go, but I do see the Moscow Gold Exchange and the Shanghai Gold Exchange, they're linking up, and in 25, the Shanghai Currency Exchange and the Shanghai Gold Exchange are also linking up. So 2025, 2026 should probably be an interesting period from various types of hard money assets, and I would also say digital assets.
To further that, there's this view that because China had this regulatory crackdown on Bitcoin and other cryptocurrencies, trading, mining, that means that the developing countries are not going to start adopting Bitcoin as a kind of monetary instrument. But it's very interesting that Hong Kong is completely liberalizing crypto. They recently made it clear that Hong Kong, you can do anything crypto. In fact, they want crypto entrepreneurs to move to Hong Kong. So this is China, right? So on the one hand, they're cracking down in the mainland. On the other hand, Hong Kong is becoming a center for crypto. So China is playing a much longer game here, in my view.
Yes.
I'll ask a less emotional question.
And there's no unemotional questions with this guy.
So I've read, and I don't know if it's accurate or not, that as more and more transactions are done with crypto, the process for proving the blockchain becomes longer and more time intensive. And so the crypto can almost be a victim of its own success. That takes longer and longer to prove the blockchain, and thus becomes less and less practical as a currency. Not a investment or speculation, but less and less practical for day-to-day transactions.
Bitcoin is designed to become more and more difficult to mine it to increase its scarcity value. So Bitcoin is really the kind of deflationary currency that Austrian economists were, thinking about. So that's inherently the structure of Bitcoin, is that it'll become harder to mine and therefore more scarce.
I just have a hard time in what you're talking about is that when you look at worldwide GDP, call it approximately $80 trillion. And then you're looking at this vehicle down here, and you're going to start trying to use this as a medium. I have questions in my mind about scale versus the entire universe. And again, I can't speak to what's going to happen 10 years from now. Oh, by the way, I don't think anybody can, other than they'll speculate. In my mind, the investable universe right now is from today to probably no longer than 5 years with what I'm expecting. And so quite frankly, in the 24-27 period, I'm fully expecting a currency crisis of the worst type in the last 100 years. And I'm an outlier on that. I think Druckenmiller just came out 2 days ago, and one of his biggest positions is a short on the US dollar. So I think you people, as Americans, we should be scared when you saw at the time of Silicon Valley Bank that they guaranteed 100% of the deposits. And for a period of 24 hours, Secretary Yellen was talking about guaranteeing the entire banking system, which was over 7 trillion of uninsured deposits. I mean, where does it end? So I would say that I'm just arguing that the abuse of our financial system is accelerating, and it's now going vertical. Consider that we added 9 trillion in 2 years and during the COVID period of time. This is out of control. So I can tell you that I have a biased viewpoint. And my biased viewpoint in March of 2020, I said, I'm done. I'm done with the US dollar. I think they're going to undermine it, and they're going to undermine others. And so I want to get out of Dodge. And I made my career in the investment field for over 45 years. And this is the worst I have ever seen it, and I am scared.
Yes. Yeah, go ahead.
Okay. Another one from online. This one is fairly long, bear with me. I haven't invested in Bitcoin yet, but I'm very interested because I'm told that it generates great sums of money. But a few friends say it was easy to invest, but to extract money from their account was next to impossible. The companies involved gave them every excuse under the sun as to why they weren't going to get any money now, but could in the future. Can you comment on this?
Look, it goes back to a saying we have in crypto, which is not your keys, not your crypto. The minute that you have an exchange or some trusted third party holding your crypto, it's not yours. So, you know, of course, whether you're giving it to Coinbase or that, you know, FTX or whatever small exchange, it's centralized and it's at risk to bad, malevolent actors. And it's really against the whole idea of crypto. I mean, when the liquidity in the major tokens is crazy. As I said, almost $20 billion of liquidity in Bitcoin in the last 24 hours. Show me that kind of liquidity with gold coins or like anything like that. Even large cap stocks, there's like the liquidity in Bitcoin, ability to transact. It's the most, I would argue, it's one of the most liquid financial instruments in the world that exists today.
How do you transfer that, and how do you transfer that into a transferable transaction? If I'm just going electronic to electronic, now I have to go into the world. And right today, you cannot go out and buy oil for Bitcoin. You may be able to buy it in dollars. You'll buy it in dollars. You may be able to buy it in yuan, but you will not be buying it today in Bitcoin.
Well, I would say that I would wager a bet with you that you can. I mean, I'm going to reach out to some of my oil trader friends. I'm sure such transactions are happening. But in terms of what you're pointing out is the on ramps and the off ramps to fiat, you know, which is you know, that is an issue because particular governments can regulate, you know, these off ramps and on ramps. So, but I would say there's a lot of opportunities to use crypto without ever having an off ramp, and you know, I use crypto all the time. It's very convenient. As I said, there's a huge amount of liquidity, and ultimately you can get to fiat. You know, just like you can move gold to fiat. Like it's but certainly if you're putting your crypto with a trusted third party, they could make it difficult to get it back. That's why you should never do it unless, you know, with a small amount.
What was your experience or and awareness of what went on with Signature Bank?
You know, a Signature Bank they got big by banking crypto startups, and that really exploded their deposits. So I don't know. I mean, there's conspiracy theory that one reason they were targeted and was that they want there's somebody wants to damage the crypto industry. So that's yeah, but I mean, if you're a bank and you take on riskier clients, obviously that's a fairly high risk business.
About 20 to 30% of their deposits were crypto. And for in case you were not aware of, one of the regulators of originators of Dodd-Frank was on the board of directors there. And
I don't think crypto was an asset on the bank's balance sheet. That the cash deposits from crypto companies made up most of their deposits, but not actually crypto.
And what they did is they limited the amount of cash that you could get out leading up to that. So if you wanted to cash out or do something like that, you were limited by the cash. So that was one of the issues I was looking at as to the risk or the impediments to an off ramp if you want to get out.
Yeah, no, it's a great point. And it comes down to that you have really two different systems. You have what in crypto we call TradFi, traditional finance, right? So you've got TradFi, then you have this crypto ecosystem, and all of the problems come from when those two different systems interact, right? That's when you either get something new that no one has done before, high probability of fraud or government action. But the crypto, like on its own, is becoming more and more mature. And there's all these applications being built on top of crypto. And I would argue that the crypto is an operating system, and it's very similar. 380 million years ago, the Cambrian explosion started, and all of a sudden there was multi-celled organisms, all these different animals and plants, and that's really what's happening with crypto and in finance, which is the Cambrian explosion in operating systems, financial systems. And so there's so much going on in crypto. I think I know Facebook is scaling back its metaverse plans, but ultimately their intention of these tech giants is in fact creating kind of artificial worlds that are kind of curated where people can interact. And so if that trend, if that becomes like a real thing, digital currency is going to be the underpinning of economics in the metaverse. So I think for me, the issue is like if you willfully choose not to have exposure to, for example, Bitcoin, you're effectively short Bitcoin. And if you ever need it in the future, it may be far more expensive. So having a little bit in case it has value. I mean, if you look at it this way, there's 87 million households in the world that are, US dollar millionaires. There's only 21 million tokens. So there's like, if everyone wants to buy one Bitcoin, they can't even get 25% of it. So choosing to not have Bitcoin is like choosing not to have gold. Like, you're taking risk. But it's a different risk, which and obviously no one can predict the future. I don't believe that Bitcoin can be stopped as a financial market, as a system. It's just code based on math, and I think it's one of the most beautiful pure monetary systems ever created.
I get to another question in the room. Yeah, go ahead.
Yeah, I just boy, this discussion has gone so many
different ways.
I've heard so many distractions, and I think what I'd like to point out is Bitcoin is a tremendous invention. It is a true scientific invention, and all these companies that are failing and everything, they're just distractions. Bitcoin itself has never failed, and I think we're still so early in this that for us to be speculating on when you can buy oil with Bitcoin, I mean, maybe in 5 years you can. We're just so early right here, right now. And I think as people, it takes a long time to learn how beautiful this invention is and does have value. There's value in being able to transact with people with no intermediaries present anywhere in the world instantaneously. that has tremendous value. This is a real scientific breakthrough. And I think as countries, as people discover that, it takes time. I mean, everyone's confused here. Okay?
Question.
Eventually, I mean, I just believe that eventually truth wins out. And there's truth here. This is the best monetary system that's ever been created. You could line it up, put gold in one column and Bitcoin in another, and run down the features that make something a strong money, and Bitcoin wins out.
Yeah,
In every regard.
I think the fear for the individual is how to do it safely. So my question to the speakers would be is, what exchange do you personally use? And which service providers do you use for your cold wallets?
I'll
say things to do.
Our other guest has more experience than that than I do. I will tell you for my own self, I still am not convinced for various reasons and of security and integrity. Plus, I'll mention that as beautiful as the science might be that one of our contributors here in the audience was mentioning, is that one of the sovereign rights of a nation is the sovereign control of its own currency. And anytime there has been a threat to that sovereignty, a country has come down hard on those who would deal with it, including losing your head. So I don't think that countries, especially large ones, are going to roll over easy. So there's going to be a battle here. And so how does that battle come out? I would say that probably governments are more fearful of an independent item such as Bitcoin than they are, and they will, that becomes our enemy. So you create rules, restrictions, regulations, you name it, penalties, and it acts as an impediment until they can control it themselves. And how will that play in with the current iteration of it? I just don't know. I just raised that.
I don't know either.
You know,
I
and
just,
so
I just feel like we keep losing the main truth here, that technology, we have invented something really
beyond that, you can talk about how beautiful the
and that's gonna be
technology is.
discovered someday, and I just feel it's gonna happen.
All I can do is I can look at central banks that control the finances of the world. Right now, 30% of all central banks or countries have been sanctioned. So there's a movement going on right now. And I can see in this past year and last month and the month is that there has been a shift in central bank acquisition into gold by a huge measure. I have never seen.
When they discover that Bitcoin is better than gold, you're actually arguing the case.
And then I have not seen China disclose their ownership like they've done since November of last year. So in my view here is China is playing a game here, and I'm going to have a better understanding of the game they're playing probably within the next not much more than 3 years. And so we're going to find out. But I'm going to say right now, the vote by the central banks and by the regulatory authorities as governed by Basel III, which dictates 98% of all central banking in the globe and that international transactions has limitations. And when you go into the crypto arena for banking and all, they just release it. You have section 1, 1A, and 2. And if you don't qualify in 1A, which means it's the equivalent of treasury and cash, then you're moving up the scale into 2. And when you get into 2, your risk-based capital requirement is 1,250%. That is going to be an impediment. The banks are only 1%. And so this is the transaction that I think you have to be looking at over the next 3-5 years. Maybe it will turn out there, but I'll leave it to somebody else.
Sorry, if I may, I could answer the actual question, which is, how, for example, would I buy Bitcoin? So, I mean, now I've got some decentralized wallets, self-custody. I can do things without interacting with an exchange, but I have used exchanges. So, like, I just went with the biggest, the ones that have some, regulation in the United States, like Coinbase and Gemini. However, I would not recommend leaving any significant, wealth on the exchanges. So I'll use it as to buy it, and then I can transfer it into my own self-custody wallet, which is, as I said, it's retrievable just with some words. So you just gotta not lose that. So you've got to have a way to protect that, what's called the private key. Now there are devices, which I've used as well, but they're hardware wallets, like for example, like basically USB drives that have special coding that you can plug into a computer or whatever, and then you can interact with your wallet through like a pin. I used to like those, and now I feel that since you need to back up that by having the seed, basically the private key stored in any case, you don't really need that device. You just need the private key. And then there's various software applications that you can then access your, for example, Bitcoin in the storage. So that way it's sovereign. So I mean, I even have sent a encrypted email to my estate lawyer explaining where my crypto is in the event I pass away. So that because I know a lot of crypto has been lost. But by the way, that's actually quite bullish because a lot of Bitcoin private keys have been lost over time. So there's like less and less supply because no one can access it. And I even know a friend of a friend who died, unfortunately, a young guy, but he had I think $3 billion of Ripple, and the family couldn't find it because he didn't leave any instructions on how to access it. So that it's storing it is not. Now the question is, how do you go to fiat in the future if you want to spend it? That's a different point. But to buy and store it is quite easy.
And I would say on the exchanges, there's only one exchange that has an auditor that's disclosed, that's a mainline auditor. That's Coinbase. You can go on to Binance, whether it's Binance USA or Binance Holding. You can't find it. The information about the controls or anything are very obtuse. And so that represents about 50% of the exchanges out there. And having been in the financial services industry for 45 years, I've gone through a few financial crises. I've testified in Washington. I've been involved with these things, and I'm just saying, I would be very anxious about having transactions in an area where I cannot get some third-party verification of what they are and what they're doing.
Gemini has a New York bit license, and I believe it has audits. I'll look into that. But I mean, Gemini, I would say, it does not offer leverage trading. So I think Gemini and Coinbase are probably equally, up there in terms of, seemingly more legit. But again, not your keys, not your crypto. So that's, you might, trade in small increments and then move it into your own custody.
So one of the original attractions, recognizing the underlying blockchain technology is phenomenal. One of the original attractions, of course, was the anonymity of being able to trade. And it sounds like from recent FBI reports that now they're able to break through that anonymity. Could we even see a case where, because of the blockchain tracking, that the anonymity is almost the opposite? The government is even easier to track, and that becomes a concern working against the usage of this.
Yeah, that's an excellent observation. So there are, for example, service providers that do forensic analysis of the blockchain and are able to, in some cases, figure out, who's doing what. But it's not by cracking the blockchain. It's more through, other, like, for example, having Bitcoin move from one address to another. But then at some point you can link, if one of those addresses get linked to an exchange or some other, then all of a sudden they can see what's going on. So yeah, I mean, blockchain is an immutable record. So whatever you do on Bitcoin, it's going to be there forever. Whether or not someone can crack it but I think it's you know, it still does not have a level of granularity like with these central bank digital currencies where they want to see every micro transaction. This is it's more of it's a real vulnerability if you're doing something where, you know, trying to wash money or hide it. But, you know, in terms of anonymity, it's fairly good. Like it's very difficult to go through, you know, trillions of transactions and, you know, spy on particular, you know, people.
Let's go to the computer.
We have two online that I think will end up going hand in hand, so I'm just gonna read off both of them. Okay, first one. It sounds to me like in the next 5 years, paper currency may be devalued to the point where it's no better than wallpaper. Is that correct? And I think I heard you say that banks are heavily investing in gold. So will gold and precious metal investments be the best way of protecting the money I have now? And the one I suspect may be connected. If you are washing your hands of the US dollar, what are you doing instead?
Okay, all right. I would say, no, it's not going to become wallpaper, but I would argue that I think the purchasing power of the currency, and I'm using that as a generic term for both European yen or US dollars, is likely to erode and erode significantly. You just saw that in 2020 when I could go down to my corner restaurant and my hamburger lunch ran $12 and now it runs $18. And so that's a devaluation in the purchasing power. So I think that's likely to do that. As for me personally, over the course, I was part of a group called Come Back America. There were 5 of us funding it. David M. Walker, former Comptroller General of the United States, and we were trying to help turn or recorrect the direction of the USS Titanic. And we closed it down at the end of 13 as an abject failure. In 14, I started diversifying my assets. 9 years ago, I would have had about 7% in hard assets. Today, I have about 70%, and I will not disclose what that mix is.
You do own some rare coins, right?
Well, if I own them, they have to be rare.
Okay. Yes, Ralph.
I have a comment. This is more tangible down there. At some of the local vending commercial outlets, you know, Stop and Go, 7-Eleven, right next to an ATM machine, there was a Bitcoin machine. And so my son, his intelligent self, he said, "Hey, Dad, how do you get one of those Bitcoin machines?" And I said, "Well, I don't know how you would get one." And he said, "Well, when you put money in, where's the money go?" And I said, "Well, it's in some complicated mathematical algorithm. It's out there." He said, "So the machine, it just absorbs the money and somebody stop by and drain it out like they do a Coke machine at the local shop?" And I said, "Well, you have to just sit there maybe 24 hours, 36 hours and see who's going to pick the money up and follow that guy and trace it around, and you can figure things out." So what's going on with this Bitcoin machine that will take your money in? Is that a depository?
I don't know. I haven't really
seen
dealt
you
with
look.
that.
Yes, they're around.
Yeah.
Yeah, they're just like a service provider. Like, you know, what is that thing where you can drop in like quarters and nickels and get some, you know, Coinstar? It's just a service provider that someone takes a huge spread and will basically print out, you know, effectively your private key in exchange for the cash that you put into it. That said, like, how do you know it's legit? I have no idea. I mean, that I've never used these Bitcoin vending machines, but that's the idea. Is that but they probably take huge spreads. Like when you go to you know, to get foreign currency from like some, you know, little shop, they charge like a 30% spread. So I would guess that it's similar, but I don't know personally.
At 2 a.m. in the morning, it's a reasonable price.
Prints out is basically a temporary wallet.
Yeah.
That contains the amount of Bitcoin you purchase. What I would do immediately then is transfer that to your own wallet that you designed, that you know the private key that's safe, because I wouldn't trust the private key.
We gotta Yeah, good.
I was just gonna say that's an excellent point. Like, so if you're dealing with some vending machine in a gas station, you know, they might take a picture of the private key and access it. So you definitely, if you using vending machines as a tool, I would suggest moving it into your own self custody wallet.
They wouldn't do that with a credit card, would they?
Yeah.
The best
Yes.
have a wallet that you own, and then you can tell the machine, put it to that wallet, that they were created.
But
All right.
someone's actually coming by to dump the money and take it out.
Yeah, so that's, maybe it's a bank, or it could be your.
Well, it's all crypto, right?
And buy a bunch of Bitcoin and then sell it out of a machine.
We got to wrap it up here. We could easily go several more hours. It's definitely the most spirited discussion we've had, which is awesome. So thank you, James online, and
James?
Rob in
Thank you.
person. And the video will be available in a couple of weeks. Everyone online who registered will get a notification. And if you're in the room here, you can scan this QR code. You'll get an email with all the videos from all the presentations are available. We'll be back at 4 o'clock with our.
We have Andrew Kimmel talking about toned silver dollars at 4.
There you go, Bitcoin and toned silver dollars. Two topics that aren't controversial at all. All right, thanks a lot, everyone.